Hi there, and welcome back to another episode of AskTom. My name's Tom Whitlock. I'm a business development consultant for Clifton Asset Management. We're a team of financial advisors, pension experts, and the team behind the commercial finance option known as pension-led funding. Now, in today's episode, we're going to look at personal guarantees, a somewhat ubiquitous term when looking for commercial finance. We're going to look at what a personal guarantee is, what it can entail if you do sign it and it does need to be called upon, and whether there are ways that you can potentially raise money for your business without having to sign one. First of all, what is a personal guarantee? A personal guarantee is described as a legal promise from an individual to repay business finance in the event that the business is unable to. I think that's fairly self-explanatory in terms of what that can entail. If a business is unable to repay its debts, either it's not got the cash at hand or whether it's gone out of business or into administration, it means that the business owner is personally liable to it, and the debts of that business do not die with the limited company that it's lent the money to. Many lenders will make business owners sign a personal guarantee in order to secure borrowing for their business. I'm sure it's the last thing on anyone's mind when that piece of paper is being signed as to what might happen if this ever came into effect. The reality is that if the borrowing is into the 5 or possibly even 6 figures, there may well be a personal guarantee there. And if the business is unable to do it and the business owner has potentially exhausted cash to keep the business afloat, it may well mean that the lender is going to look towards the personal assets of the business owner. They can potentially look at assets like the family home to raise finance to make up for the debt that wasn't able to be serviced by the business. So are there ways that businesses can borrow money without signing a personal guarantee? Well, yes, there are. There are some unsecured lenders out there that will advance funds without any charges or personal guarantees in place. The interest rates on these can be quite high, and it does often come at the cost of that additional risk being taken by the lender to take no security at all, which is incurred by the business owner as they repay those funds. Now, of course, with our methodology, the pension-led funding route, it's not lost on me that there is some personal liability when the source of the funds is the business owner's own pension. But what pension-led funding does allow them to do is to limit any potential losses to that pension fund, and certainly only a portion of those funds. The deal itself will have been through a fairly rigorous credit committee process where we'll try and iron out any creases that may have been missed along the way. And most importantly is that along the way, for taking the risk of lending to the business, the pension fund is not requiring that personal guarantee. So anything is limited to that pension fund if there are any losses incurred at the end of the business's life cycle. Now, if you'd like to learn about ways that pension-led funding could potentially inject some capital into your business, maybe to repay some existing funding that is already secured by way of a personal guarantee, remember we've got contact details listed at the end of the video and below in the description. Get in touch, we're more than happy to see what it is we can do and how it is we can help with you and your situation. Thank you very much for your time. Remember to tune in every Thursday morning for another episode of Ask Tom. You can subscribe to make sure that you're kept up to date and turn on notifications to know that you're alerted whenever we release a new video. You can like our videos to let us know we're doing a good job, or if you'd like us to do a video that we haven't covered yet, remember to get in touch on the details below. For now, thank you very much for your time, take care, and tune in for the next episode of Ask Tom. Goodbye.